Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, with a combination of heavy headwinds, the Australian dollar took many challenges to the top side and eventually turned. This was on the back of the less hawkish RBA Governor Lowy and a more hawkish US Federal Reserve Chairman Powell, which ignited a whirlwind for the Australian dollar and plummeted, losing around 2.5%. Now, yesterday, as widely expected, the RBA raised its cash rate at its monthly board meeting by 25 basis points from 3.35 to 3.6, the highest level since mid-2012. In the statement, Governor Phil Lowy said that the RBA would pay close attention to incoming economic data in assessing when and how much further rates need to go. Meanwhile, in overseas news, US Federal Reserve Jerome Powell stuck to a hawkish tone when he told Congress that rate hikes are likely to be higher than previously expected to fight inflation and cool down the economy. So as the Australian dollar sank, the US dollar, which measures the greenback strength against a basket of 6 major currencies, surged from 104 to 105.60, as global markets are now concerned that the Fed's March meeting could see a chance of a 50 basis point rate hike compared from a previously expected 25 basis point. US Federal Reserve Powell will again testify on Wednesday, so keep an eye on that, as the market no doubt will find further ammunition to move. And the fact that the dollar could actually claim the 106 objective and move on towards 109. So let's have a look at the technicals. We can see that we have plummeted into negative territory, and now since crushing the level of 66.60 has revealed the next target around 65 cents. Keep an eye on this level, because if we take out that, then there is little to see until around 62 to 63 cents. But a key point, as we can see back here in September last year, that the market was relatively keen in taking the market higher, as after breaking through the level in October around 65 ignited the trend. So no doubt the bulls probably will return from this region of 65 cents. Any advancement sees a short-term cap around 66.25. Well, with the dollar rallying, as I mentioned, up towards 105.60, the euro has plummeted further and now looks towards 105 figure 15. In light of the pattern, a break there would give further exposure to the downside for the euro. And if it do see a break of 106 for the dollar index, then we may see that rally and see the euro plummet on towards 103 as an objective. So keep an eye on this level around 105 figure 15. Looking to the top side, 105.65 sees as a short-term cap on the day. The dollar yen, well, with the ignited rally in the US or the greenback, we can see that we are getting very closer to the upside targets. Was at 137, now extending to 138 with 139 to 142 seen above. If do see a break of 106, as I mentioned, then this would give further scope towards the upside. A bit of a key point here as we now challenge the region which is close to around 138. The sterling, well, the market crushed the level all the way down and reaches its objective of 118 and now puts further stress on this level. If we see a break here, 116.75 would be the next target as a potential objective, and with the trend supporting a bear case, could see this actually take place and therefore give further stops in the market. Look at it. Gold, well, the market lost its shine after the hawks were released by the US Federal Reserve and then opened the door for a larger interest rate increase. Now puts further exposure to 1,786 as a target. But looking back to the recent lows, we're getting very close there, around 1,804. But I don't feel this time around the market may hold there due to the jitters that Fed powers put into the markets. Reassess from 1,786 as we could see a bullish case emerging or correction, but if not, then we need to re-establish on the next downside target, which could be anywhere towards 1,740. Wrapping up with oil, well, the market plummeted nearly 5% overnight, clearly rejecting the level around $81. The market plummeted to 77 and now puts further scope onto the downside, with the immediate target seen around 75.5 and reassess. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday pull. I hope you enjoy the rest of the day.